Hallo und herzlich willkommen, liebe Cap Insider, zu einem neuen Video bei uns auf capinsight.com. Und es geht noch einmal um den Ukraine-Krieg und seine Ausläufe, ja, seine Beeinflussung auf den Finanzmarkt. Wir haben mit vielen Experten schon gesprochen und ich freue mich jetzt auf ein gleich ganzes Expertenteam. Great welcome to Will Landers, Fondsmanager, and Frederico Monnerat, Head of International Distribution at BTG Pactual Asset Management. Hello.
Hi there.
Hi, Matthias.
Nice to see you. Let's talk about BTG Pactual Asset Management. Do you give us a little introducing?
Sure. First of all, thanks for having us, Matthias. So BTG Pactual Asset Management is part of Banco BTG Pactual, which is the largest independent investment bank in Latin America. BTG Pactual Asset Management has roughly $100 billion under management across several asset classes. We have around 400 employees within our group, but BTG as a whole has over 6,000 employees. And Will Landers is our head of equities. We have roughly $2.5 billion within our equity division. And this is between SMAs, international funds, and also funds across country funds across Latin America as well.
All right. So before we start with an analysis of the markets, is the Ukrainian war a topic in Brazil? How is the position, the mood in Brazilian politics? Let us know, and society about this Ukrainian-Russian war.
Sure, Matthias. Again, thanks for having us. Look, I think Brazil is reacting like most of the world. The people in Brazil are very much against the war and the Russian invasion of Ukraine. Brazil voted with the Security Council in the initial vote against the aggression. I think in terms of economic sanctions, the government, like most governments in Latin America, has been neutral. But in terms of being against the invasion, I think it's pretty much widespread in Brazil. The press coverage and everything else. I think being with most of the world against the conflict.
All right, and how does the conflict affect, let us talk about this point, the Latin American markets? Which consequences do you see worldwide and, to Latin America?
Look, Latin America is very far from the conflict geographically, in terms of business ties. So, Russia, Ukraine are not huge economic partners with the region. So I think in terms of direct impact for the economies there is limited. Obviously, we're going to have to deal with the inflationary pressures that we're going to have from the disruptions in some of the commodities that were already disrupted even before this war started. But when we look at Latin America, and I think when we look at the performance of markets so far this year, Latin America had been one of the few areas that was performing well and recovering from an underperformance that we've seen over the last few years, especially because you had seen this switch from growth to value stocks and towards more commodity names, given the lack of supply in many areas. And Latin America is a net exporter of oil, net exporter of iron ore, net exporter of steel, of pulp and paper. Obviously, agribusiness is very important. So I think there's a lot of positive things that we can point here from a market perspective, not to want to put a positive thing on a war, obviously.
Yeah, all right. So let me know, without this war, what is the role of German or European market in Latin America?
Again, it's very small. I mean, I think when we look at the ties, it tends to be more with the United States. Mexico being the biggest trade partner, or having the U.S. as its biggest trade partner, and it's the country that has most of its GDP being exported compared to the rest of the region. When we look at South America, it's mostly commodity exports. So China then becomes much more important. So I think the expectations that China was going to start to recover after the Olympics and start to see economic growth returning there was one that, along with the lack of supply in a lot of the commodities, made us positive in many of the markets in the region.
All right. So in this conflict, it's also about resources and energy like oil and gas. Europe, Germany is dependent of Russian exports and now beginning to become more independent from Russia and opens for new suppliers. Is this also a chance for Latin American commodity markets?
I think it's going to be more in terms of the impact it has on pricing of the commodities than necessarily becoming a large supplier to Germany or to Europe. We are, as a region, a net exporter, but it's not a lot. It's not a huge portion of it. But what it does, if you look at Brazil, Brazil has become a net exporter of oil since finding the pre-salt findings 10 years ago off the coast of Brazil. That's mostly replacing imports that were coming in from Brazil. When we look at Mexico, when we look at Colombia, there are some exports, but again, mostly going north, and there isn't ability to grow that significantly.
All right. So the conflict also increases the pressure in Europe to focus on renewables energy, non-fossil. You have also a focus on ESG and impact investing at BTG. What do you expect for the worldwide transition from fossil to renewables?
Yeah, I think this is just going to add more fuel to the fire, if I can use that term, in terms of increasing the focus on trying to come up with different strategies, different technologies, quicken this whole transition that we've been working through. Our impact investment funds have been looking at these types of companies around the world. You have to think that Latin America, especially Brazil, was at the forefront a couple of decades ago, coming up with ethanol as a very capable manner to run your cars. Most cars in Brazil can run 100% on oil, gasoline, 100% on ethanol. The region, despite having the stigma of not being very ESG friendly, it's a very clean area in terms of 60% plus of Brazil's energy, for example, comes from waterways, from hydro. So it's already a very clean system. But I think this is going to just continue to speed that. But I think when we look at ESG, we have to remember that the huge focus that we had on not investing in oil, it's kind of putting us in this trouble right now in terms of the lack of investments that have gone into the sector, while the transition hasn't fully happened. So I think we have to keep in mind that the S part of it, the social part of it, can suffer if we just lose sight of the fact that it's going to take a decade, 2 decades, 3 decades for us to fully get to where we need to get to. Obviously, we need to get there, but it has to be a transition. It can't be like all or nothing in one basket or the other.
All right. So let's come to point besides oil and gas. Mining and industries based in Brazil, Mexico, and Chile. Your Latin American equity fund has also a big exposure in banking, finance, and other branches. How are you and your investment strategy responding to current developments?
Yeah, I think as I mentioned before, I think we're very well positioned for what the world is looking to buy at this point. When we look at the stock markets in Latin America, where they talk about Brazil, which represents about 60% of the market, Mexico's another 25%. So you see, it's very concentrated. Chile is only about 6-7. It tends to be old economy. It tends to be mining, it tends to be energy, it tends to be banks, and then you get into the consumer areas, and then you have e-commerce and things like that. But as part of overall omni-channel strategy. So when we look at mining, iron ore coming from Vale in Brazil is the highest quality, least pollutive iron ore in the world. When we look at copper, Chile, Peru are the two countries that have the ability to grow the production of copper, but are right now kind of on hold as we have some changes in governments there. Lithium as well, a big export product from Russia. Chile and Argentina have ample supplies of lithium, and so forth and so forth. And so I think when we look at the mining area, we're very well positioned. And again, this growth to value shift, it's where Latin America, I think, will do well, and this is how we're positioning our portfolio. The banks in the region have no exposure to Europe or to Russia, to Ukraine, anything like that. They tend to be a lot more exposed to the domestic economies. And we have to remember that this whole battle that we've been having, how much is the Fed going to increase rates? When is the EU going to start to increase rates? Latin America's already gone through that. We couldn't afford to let inflation get out of control. So the Brazilian central bank has already increased rates from 2 to 10.75%. The Chilean central bank has increased rates. The Mexican central bank has increased rates. So we're already at the end of our hiking cycle. So this whole issue of will the Fed now move because of the war? We've already done what we had to do in order to keep inflation expectations under control, which I think is very good for the medium term for the region.
Yeah. Yeah. All right. So your flagship fund is investing in Latin America. The role of this Ukrainian and Russian war is not that big as in Europe,
we were already positioned to benefit from higher commodity prices, higher energy prices, and we already had an adequate position, I think, in the banking sector, and again with very little exposure to Europe. So I think we should continue to see the performance that we saw in the first 2 months of the year, when Latin America was up in the teens in dollar terms, while the rest of the world was down in the teens. I think that has a space to continue.
All right.
Yeah. So it's I think investors have been looking to diversify from China for a while, and obviously the situation in Russia and Ukraine only intensifies their desire to be in other regions, and obviously Latin America tends to benefit from that. So I think the foreign flows will continue to be significant across the region, as we've been seeing for the past few months.
Yeah, so this is one effect of the Ukrainian-Russian war in Europe. So thank you for this moment, this short moment to talk about such a big point. And yeah, we do not forget the human crisis in Europe with this war. And yeah, thank you for the moment. Will Landers, fund manager, and Frederico Monnerat, head of distribution at BTG. Thank you very much.
Thank you,
Thanks, Matthias. Good to be with you.
Thank you.